Shalom, my friends. I want to talk to you today about something that most people hate talking about, but that has a massive impact on your wealth: taxes. Because here's the truth: it's not just about how much money you make, it's about how much money you keep. And if you're paying more in taxes than you legally have to, you are giving away your hard-earned money to the government when you could be using it to build wealth, to provide for your family, to give to charity, to create a better life. Now, before I go any further, let me be very clear. I am not a tax attorney. I am not a CPA. I am a rabbi who has built wealth and who has learned, through experience and through studying with experts, how to legally minimize my tax burden. Everything I'm about to share with you is legal, ethical, and based on the U.S. tax code. But I strongly encourage you to consult with your own tax professional before implementing any of these strategies. With that said, let me ask you a question. Do you know how much you paid in taxes last year? Not just income tax, but all taxes: federal income tax, state income tax, Social Security tax, Medicare tax, property tax, sales tax. When you add it all up, the average American is paying 30 to 40% of their income in taxes. That means for every dollar you earn, 30 to 40 cents goes to the government. Think about that. If you make $100,000 a year, you're giving $30,000 to $40,000 to the government. That's a new car every year. That's a down payment on a house every few years. That's your children's college education. That's your retirement fund. And you're just handing it over. But here's what the wealthy know that most people don't. There are legal ways to dramatically reduce your tax burden. The tax code is not designed to punish the wealthy. It's designed to incentivize certain behaviors. And if you understand these incentives, if you structure your finances correctly, you can legally pay far less in taxes than you're paying right now. Today, I'm going to reveal to you the ancient Jewish wisdom on taxes and wealth preservation, and I'm going to give you specific, practical strategies that you can implement right now to legally reduce your taxes. These are strategies that I use personally, strategies that my wealthy friends use, strategies that are available to anyone who takes the time to learn them. But first, let me tell you a story from the Torah that will change the way you think about taxes forever. In the book of Exodus, when the Israelites were slaves in Egypt, Pharaoh imposed heavy taxes on them. He took a portion of everything they produced. He taxed their labor, their crops, their livestock, and the more they produced, the more he took. This was not just taxation. This was oppression. This was theft. But then, after the Israelites were freed and established their own nation, God gave them a tax system, and it was radically different from Pharaoh's system. The primary tax was called the tithe, which was 10% of your income, not 30%, not 40%, 10%. And this tithe didn't go to a bloated government bureaucracy. It went to support the Levites, who were the priests and teachers, and to help the poor, the widows, and the orphans. This is the biblical standard for taxation, 10%. Anything beyond that, according to Jewish tradition, is considered oppressive. In fact, the prophet Samuel warned the Israelites that if they demanded a king, the king would take 10% of their crops and flocks, and they would cry out because of the oppression. And yet, today, we're paying 3 to 4 times that amount, without question. Now, I'm not saying that all taxation is theft. We live in a society that benefits from roads, schools, police, fire departments, and other public services, and we have a responsibility to contribute to the common good. But I am saying that you have a moral obligation to minimize your tax burden, legally, so that you can maximize your ability to provide for your family, to build wealth, to give generously, and to fulfill your purpose. In the Talmud, there is a teaching. The law of the land is the law. This means that we are obligated to follow the laws of the country we live in, including tax laws. But it also means that we are entitled to use every legal provision in the tax code to our advantage. If the government creates tax deductions, tax credits, and tax strategies, we are not only allowed to use them, we are wise to use them. So let me give you the strategies. These are specific, actionable steps that you can take right now to legally reduce your taxes. I'm going to break them down into 3 categories: strategies for employees, strategies for business owners, and strategies for investors. Let's start with strategies for employees. Even if you work a W-2 job, there are ways to reduce your tax burden. Strategy number 1. Maximize your retirement contributions. If your employer offers a 401k or 403b, contribute as much as you can, up to the maximum allowed by law. For 2025, the contribution limit is $23,000, or $30,500 if you're over 50. Every dollar you contribute reduces your taxable income dollar for dollar. So, if you're in the 24% tax bracket and you contribute $20,000 to your 401k, you save $4,800 in taxes. That's real money. Strategy number 2. Use a health savings account, or HSA. If you have a high-deductible health plan, you can contribute to an HSA. For 2025, you can contribute up to $4,300 for individuals or $8,550 for families. These contributions are tax-deductible. The money grows tax-free, and if you use it for qualified medical expenses, you never pay taxes on it. It's the only account that gives you a triple tax benefit. Strategy number 3. Take advantage of commuter benefits. If your employer offers commuter benefits, you can set aside up to $315 per month tax-free for transportation costs like parking, transit passes, or ride shares. That's $3,780 per year that you're not paying taxes on. Strategy number 4. Use a flexible spending account, or FSA. You can contribute up to $3,200 per year to an FSA for medical expenses and up to $5,000 for dependent care expenses like daycare or after-school programs. These contributions are pre-tax, which reduces your taxable income. Strategy number 5. Fix your W-4 withholding. Many people get a big tax refund every year and think that's a good thing. But a tax refund is not a gift from the government. It's your own money that you overpaid in taxes, and the government is giving it back to you with 0 interest. You essentially gave the government an interest-free loan. Instead, adjust your W-4 so that you're withholding the right amount, and use that extra money throughout the year to invest, to pay down debt, or to build your business. Now let's talk about strategies for business owners. This is where the real tax savings happen. The tax code is designed to incentivize entrepreneurship and business ownership. If you own a business, you have access to deductions and strategies that employees simply don't have. Strategy number 6. Deduct your business expenses. As a business owner, You can deduct any ordinary and necessary expenses related to your business. This includes office supplies, software, equipment, marketing, travel, meals with clients, professional development, and much more. The key is to keep good records and to make sure the expenses are legitimately business-related. Strategy number 7. Use the home office deduction. If you work from home, you can deduct a portion of your rent or mortgage, utilities, internet, and other home expenses based on the percentage of your home that's used exclusively for business. This can save you thousands of dollars per year. Strategy number 8. Hire your children. If you own a business, you can hire your children and pay them a reasonable wage for legitimate work. If your child is under 18 and you're a sole proprietor, you don't have to pay Social Security or Medicare taxes on their wages. And if their total income is below the standard deduction, they don't pay any income tax either. This allows you to shift income from your high tax bracket to their zero tax bracket. Strategy number 9. Set up a retirement plan for your business. As a business owner, you can contribute much more to retirement accounts than employees can. You can set up a SEP IRA and contribute up to 25% of your income, or up to $69,000 for 2025. Or you can set up a solo 401k and contribute up to $69,000 or $76,500 if you're over 50. These contributions are tax deductible and can dramatically reduce your tax burden. Strategy number 10. Use the Qualified Business Income Deduction, or QBI. If you own a pass-through entity, like an LLC, S-Corp, or sole proprietorship, you may be able to deduct up to 20% of your qualified business income. This is a massive deduction that was created by the Tax Cuts and Jobs Act, and it's available to most small business owners. Now, let's talk about strategies for investors. If you invest in stocks, real estate, or other assets, there are ways to minimize the taxes on your investment income. Strategy number 11. Hold investments for more than 1 year. If you sell an investment that you've held for less than a year, you pay short-term capital gains tax, which is taxed at your ordinary income tax rate. But if you hold it for more than a year, you pay long-term capital gains tax, which is much lower. For most people, the long-term capital gains rate is 15%, and for some, it's 0%. This one strategy can cut your investment taxes in half. Strategy number 12. Harvest your losses. If you have investments that have lost value, you can sell them to realize the loss, and use that loss to offset gains from other investments. This is called tax loss harvesting, and it can significantly reduce your tax bill. You can deduct up to $3,000 in losses per year against your ordinary income, and any excess losses can be carried forward to future years. Strategy number 13. Invest in tax-advantaged accounts. Use Roth IRAs, traditional IRAs, 401ks, and HSAs to shield your investments from taxes. In a Roth IRA, your investments grow tax-free, and you never pay taxes on withdrawals in retirement. In a traditional IRA or 401k, you get a tax deduction now and defer taxes until retirement, when you may be in a lower tax bracket. Strategy number 14. Invest in real estate. Real estate offers some of the best tax advantages of any investment. You can deduct mortgage interest, property taxes, insurance, maintenance, and depreciation. And if you hold rental property, you can use depreciation to create paper losses that offset your rental income, allowing you to collect rent tax-free. Plus, if you sell a property, you can use a 1031 exchange to defer capital gains taxes indefinitely by reinvesting in another property. Strategy number 15. Use the minimal rental use rule. If you rent out your home on Airbnb or similar platforms for 14 days or less per year, the income is completely tax-free. This is called the Augusta Rule, and it's a little-known provision in the tax code that can put thousands of dollars in your pocket tax-free. Now, let me tie all of this together with a principle from the Torah that will transform the way you think about money and taxes. In the book of Proverbs, King Solomon writes, "The wise store up choice food and olive oil, but fools gulp theirs down." This is a principle about stewardship. It's about being wise with what you have, about preserving and protecting your resources so that you can build wealth over time. Paying more in taxes than you legally have to is not virtuous. It's foolish. It's gulping down your resources instead of storing them up. It's giving away your ability to provide for your family, to build generational wealth, to give generously to causes you care about. The wealthy understand this. They hire accountants, tax attorneys, and financial advisors to help them legally minimize their taxes. They structure their income, their businesses, and their investments in ways that take full advantage of the tax code. And as a result, they keep more of what they earn, they build wealth faster, and they have more resources to make an impact in the world. You can do the same. You don't need to be a billionaire with an army of advisors. You just need to educate yourself, to implement these strategies, and to work with a good CPA or tax professional who understands these provisions. Let me give you a practical action plan. Here's what I want you to do in the next 30 days. Step 1. Pull out your last tax return and review it. Look at how much you paid in taxes. Look at what deductions you took. Look at what you might have missed. Step 2. If you're an employee, make sure you're maxing out your 401k, HSA, and FSA contributions. Adjust your W-4 if you're getting big refunds. Step 3. If you're a business owner, make sure you're tracking all your business expenses and taking every deduction you're entitled to. Consider setting up a retirement plan for your business. Step 4. If you're an investor, review your portfolio and look for opportunities to harvest losses, to hold investments longer for long-term capital gains treatment, and to invest in tax-advantaged accounts. Step 5. Schedule a meeting with a CPA or tax professional who specializes in tax planning, not just tax preparation. Ask them to review your situation and recommend strategies to reduce your taxes. If you do these 5 things, I guarantee you will save thousands, if not tens of thousands of dollars in taxes over the next few years. And that money can be used to build wealth, to invest in your future, to provide for your family, to give generously. Remember the words of King Solomon. The wise store up choice food and olive oil, but fools gulp theirs down. Be wise. Protect what you've earned. Use the tools that are available to you, and watch as your wealth grows. Shalom, and may you be blessed with the wisdom to steward your resources well, and the courage to take action on what you've learned today. Now, I want to go deeper into some of these strategies and share with you some additional wisdom from the Torah that will help you think about taxes and wealth in a completely different way. Let me start by addressing something that I know is on many people's minds: Some people feel guilty about minimizing their taxes. They think that paying more in taxes is somehow more patriotic, more generous, more righteous. But this is a misunderstanding of both morality and stewardship. In the Talmud, there is a story about Rabbi Akiva, one of the greatest sages in Jewish history. Rabbi Akiva was once traveling with a large sum of money to ransom Jewish captives. Roman tax collectors stopped him and demanded that he pay a tax on the money he was carrying. Rabbi Akiva refused. He said, "This money is not for me. It is for a holy purpose, to save lives. I will not give it to you." The tax collectors threatened him, but Rabbi Akiva stood firm. And eventually, through a series of events, he was able to continue his journey without paying the tax. The Talmud praises Rabbi Akiva for this, not because he broke the law, but because he understood that his first obligation was to the higher purpose of saving lives, not to enriching the Roman government. Now, I'm not suggesting that you refuse to pay your taxes. That would be illegal and foolish. But I am suggesting that you have a higher obligation than simply maximizing the government's revenue. You have an obligation to your family, to your community, to the causes you care about, to the legacy you want to leave. And if you can legally minimize your taxes so that you have more resources to fulfill those obligations, you should do so without guilt. In fact, I would argue that it's irresponsible not to. If you're paying more in taxes than you legally have to, you're taking money away from your children's education, from your retirement, from your ability to give to charity, from your ability to create jobs and opportunities for others. You're essentially saying that the government is better at using your money than you are. And I don't believe that's true. So let me give you some additional strategies that go beyond the basics I've already shared. Strategy number 16. Consider structuring your business as an S corporation. If you're a business owner and you're currently operating as a sole proprietor or an LLC taxed as a sole proprietor, you're paying self-employment tax on all your net income. Self-employment tax is 15.3%, which covers Social Security and Medicare. But if you structure your business as an S-corp, you can pay yourself a reasonable salary and take the rest of your income as distributions. The salary is subject to self-employment tax, but the distributions are not. This can save you thousands of dollars per year. For example, if your business makes $100,000 in profit and you're a sole proprietor, you pay $15,300 in self-employment tax. But if you're an S-corp and you pay yourself a $60,000 salary and take $40,000 in distributions, you only pay self-employment tax on the $60,000, which is $9,180. That's a savings of $6,120 per year. Over 10 years, that's $61,200. Strategy number 17. Maximize your charitable giving. In the Torah, we are commanded to give 10% of our income to charity. This is called tithing, and it's a fundamental principle of Jewish life. But here's what most people don't know. Charitable giving is also one of the best tax strategies available. When you give to a qualified charity, you can deduct the donation from your taxable income. So, if you're in the 24% tax bracket and you give $10,000 to charity, you save $2,400 in taxes. Essentially, the government is subsidizing your charitable giving. You're giving $10,000, but it's only costing you $7,600 out of pocket. And here's an advanced strategy. If you have appreciated stock, instead of selling it and paying capital gains tax, you can donate the stock directly to charity. The charity receives the full value of the stock. You get a tax deduction for the full value, and you never pay capital gains tax on the appreciation. This is one of the most tax-efficient ways to give. Strategy number 18. Use a donor-advised fund. If you want to give to charity but you're not sure which charities to support yet, you can contribute to a donor-advised fund, or DAF. You get an immediate tax deduction for the contribution. The money grows tax-free in the fund, and you can distribute it to charities over time. This allows you to bunch your charitable giving in high-income years to maximize your tax deduction. Strategy number 19. Invest in opportunity zones. Opportunity zones are economically distressed areas where the government is trying to encourage investment. If you invest capital gains in an opportunity zone fund and hold it for at least 10 years, you pay zero capital gains tax on the appreciation. This is an incredibly powerful tax strategy for long-term investors. Strategy number 20. Use a backdoor Roth IRA. If your income is too high to contribute directly to a Roth IRA, you can use a backdoor strategy. You contribute to a non-deductible traditional IRA, and then immediately convert it to a Roth IRA. This allows you to get money into a Roth IRA even if you're above the income limits. And once it's in the Roth, it grows tax-free forever. Now, let me share with you a deeper principle from the Torah that ties all of this together. In the book of Deuteronomy, Moses teaches the Israelites, "Remember the Lord your God, for it is He who gives you the power to get wealth." This is a profound statement. It's saying that wealth is not just the result of your own effort. It's a gift from God. It's a blessing. And with that blessing comes responsibility. You are not the owner of your wealth. You are the steward of it. God has entrusted you with resources, and He expects you to manage them wisely. This means not wasting them, not squandering them, not giving them away carelessly, even to the government. In the Talmud there is a teaching, "It is forbidden to be wasteful." This is called Bal Tashchit, the prohibition against waste. And it applies not just to physical resources, but to financial resources as well. If you're paying more in taxes than you legally have to, you're being wasteful. You're not stewarding your resources well. So, here's what I want you to understand. Minimizing your taxes is not about greed. It's not about selfishness. It's about stewardship. It's about being a good manager of the resources God has entrusted to you, so that you can use them for the purposes He has called you to. Let me give you a personal example. A few years ago, I was paying a significant amount in taxes. I was doing well financially, but